while now. I've been trading for a while now, and it's been a long, hard, tough road to hoe. I'll be really honest with you. I have not made anywhere near the kind of money that I thought I would have been making by now, and I get highly frustrated all the time. I have to stop though at times and just ask myself, well, you've tried a lot of things over this period. What has worked the best? What has worked the best? And I have to say that for me, for myself, my personality, my skills, my mindset, my skill set, what has worked the best has been to take very quick scalps where it just seems so obvious that what the price is doing. Like, when price is just falling like a rock. I first started doing this when I was like at the Open, at the New York Open, and you could just, price tends to have a lot of momentum in one direction or the other. And so I would just kind of put a ton of contracts on, like maximum contracts, like 10 or 15, and just scalp like 1 point, like 4 ticks. Like it would be over. In some cases, I looked at the trade logs, and it would be less than 1/100th of a second in terms of the getting the fill, and like it would just be like 1/100th of a second or 3/100ths of a second or that kind of thing. It's just like, wow, okay, that is fast, and I could, there were days that I racked up like 10 $1,000 trades in a row on my practice account, just doing that. And it just seems so easy. But then there were times when, if you're using such heavy shares and the market's actually moving in the opposite direction when you happen to get in, because that's what price does. It bounces hard on the NASDAQ. You could get stopped out for huge losses. So, what I realize and what I'm realizing is that this can be refined. This whole idea of scalping can really be refined, and it takes a lot of work to do it, but I think I've got a methodology that works pretty good. I managed to get a funded account recently using this methodology, and it has to do with several things. It has to do with moving averages, and it has to do with using Heiken Aishi candles, and it has to do with finding pivot points on the chart where price is rolling over, and then taking a quick scalp for not massive contracts, but just reasonable contract amounts. That's what you need to do in a funded account. In an evaluation account, you can take a little bit more risk because the evals are kind of cheap, and you can take a little bit more risk. But I've been using Top Step 150K accounts, which actually give me $4,500 of drawdown. And it's not intraday drawdown, it's end of day drawdown, at least for the evals. Now, when it gets to a live, not an express funded account, which is the first step of funding, but the live funded account, they do use intraday trailing. So in those cases, scalping is going to come in even handier because you just take your quick money off the table. You never have to worry about, in big intraday pullbacks, like, eating up your drawdown. So that's actually a fantastic strategy. The scalping strategy is actually a fantastic strategy for intraday drawdown type platforms. Okay, so I'm going to show you what I got right here. These are two clouds. This first cloud is a 1 minute 9 and a 1 minute 20. 1 minute 10 and a 1 minute 20. And I've just shaded it in so you can see that when the 9's above the 20, it's green. When the 9's below the 20, it turns red. Okay. The other one is a super fast cloud, and this is a 10-second 20 and a 10-second 21 cloud. So pretty fast little clouds there. I'm actually going to be using 5-second candles. So let me put that on the board right now. I'll show you the 5-second candles as it relates to these two clouds. Okay. So here's the idea. What I decided is that this is an experiment I'm going to be starting next week. I've always been a two-way trader. Why in my mind I'm like, why should I pass up, opportunities if the market's going up? I want to play the market up. If the market's going down, I want to play the market down. Well, guess what? You need an edge in trading, and what I've noticed, and I know a lot of people have noticed this, is that shorts tend to fall faster than longs rise. So the old saying is shorts take the elevator and longs take the stairs. And that's really true. And when you're in a trade and you're just chopping around on the way up, it's really uncomfortable. It really is, and I'm getting tired of that. I really am. I want trades that have a little bit more momentum, at least enough to get me my scalp. And so I think from now on, at least next week, I'm going to 100% focus on short trades. If the market just goes straight up all day, then I just don't trade. But that almost never happens. There's almost always pullbacks in the market, even on up days like yesterday on Friday, which, as you can see, was an up day. There were definitely times, 15-minute periods, 20-minute periods, maybe 25-minute periods where price would pull back sharply, then bounce, and then pull back sharply again before bouncing up again. So we're going to focus on these times where you have a MACD on the 5-minute, which goes ahead and crosses under the signal line, or touches and then converges and diverges under the signal line. And this is going to be the time period that we're really going to focus on, okay, taking our trades, okay? This is when we want to be in the market doing our scalps to the south side, okay? Because this is where the juice is for me and this system, okay? So once we see that this, we're starting to have a rollover in price as indicated by touching the MACD line, touching the signal line on the 5-minute, we're going to look up and we're going to see, okay, what happened? We made a swing high, a little bit of a doji there, a tiny body candle, and now we're headed down, okay? So what we're going to do is we're going to switch over to the fast chart when we see this. And this first one, and by the way, I just want to say that this happened with a higher high. Now that's a warning, okay? As you can see, this high here, this swing high here, where MACD was above the signal, is lower than this swing high, okay, that we got just before MACD rolled over. Okay, so because we were coming off of a swing high that was a higher high, we don't expect things to fall too quickly, and we're going to be definitely going to be looking to scalp out. We're going to scalp out 8 ticks on the ES or 20 ticks on the NQ. Right now, for the purposes of this illustration, I'm going to be showing you the ES. Okay, so now that we've got a touch here at 1020, we're going to flip over to the 5-second chart on this side, and we're going to start looking for entry points based on a couple things. Okay, the entry points are going to be based on, these are Heiken Aisha candles, by the way. They smooth price action so you can see the change in direction much more easily. We're looking for the color change. We're going to play the color change game. We're going to look for price candles to change from green to red, but they have to do it at specific points on the chart, okay? They cannot do it inside the green cloud, okay? They can only do it under a green cloud or under or in a red cloud, okay? So that's one place, and the other place they can do it, we'll look at trades, is at the fast 5-second 20, okay? At the 5-second 20. So we're looking for a color change to happen in one of two places. We're going to be looking for it to happen either under the cloud, okay? And it cannot be in the cloud, by the way. You can't play the color change game in the green cloud. If you're going to play it in the cloud, it's got to be in the red cloud, or it can be under the green cloud, but only, and this is only if, and this goes for any trade, whether it's under the green cloud, at or under the fast cloud, or under the red cloud, price has to roll over while this MACD is under the red bar, okay? I know it's kind of a lot to hold in your mind, But it's really important that you follow these rules, because unless you do, you're not going to win. Okay, you just won't. There's too much strength in the opposite direction. If you're up here, if you're in here, when you're trying to take this rollover, right? But you're inside the red bar. It's not going to work. Okay, you need to wait for a rollover to occur. Okay, under the red bar and under one of your two options, either the green cloud or the other cloud. I'll call it this is the 920, 1 minute 920. I'll call it the 920 or the 2021. Okay, that's the 5-second 2021. I'm sorry, a 10-second 2021 here, and that's a 1 minute 920. Okay, so those are your options. So as you can see, if you look at this, you can see right here we had a trade, right? Actually, right here, we definitely had a trade. Why? We rolled under the green cloud and under the red bar. Okay, here we had a trade. We rolled under or at the green fast cloud and under the red bar, right? Okay, here we're at it, but we're invalidated because we're not under the red bar. So we skip this one, all right? Just skip it, okay? Now we come down under the red bar again, and we come in, we kiss the red bar, the bottom of it. We kiss the bottom of the cloud. That's definitely a trade. When these candles change color, that's definitely a trade, okay? Now you got a trade there, all right? Color change and a trade, okay? This one, unfortunately, it turned out to be a really nice trade, but we have to skip it. Why? Because it did not occur under the green cloud. Now, there's one exception to this that you can make, and that's that if you miss out on a good trade because your MACD was too strong and it was above the zero line here in the red bar, hidden inside the red bar, what you can do is you can look to see if you get one more chance at it. And sometimes what it'll do, it'll put in a descending triangle or a little pop, okay, under this green cloud. And if that happens, and another, like a little, kind of like this is like a shallow pullback, right? You have a probe here, and then kind of like some dojis, and then a resumption. So if that happens under the green cloud and under the red bar, you can go ahead and take this trade. Okay, this is kind of a special circumstance, kind of a trade, but it is valid. It's okay. So you got this, okay? So you're scalping now. You have to take scalps. Now this one actually went down pretty far, okay? And then we got one more here. Now this one is a little bit suspect because it's not much of a rollover here. It's really coming up from a strong bounce down below. And so you got to be careful on this one. This one could stop you out if you took it and you're not careful. You might want to be, if you see something like this that's coming up from way from below, it's bouncing hard. So it's got strength in it. And even though it did roll here, even though you did see a roll and it did follow the, satisfy the requirements of a roll under the bar, color change under the bar, it didn't go very far. 21 down to about 19. It barely made it. It barely made your 8 ticks. It did make it, barely, okay? So if you go down, if you get in and you see it comes within, 1 or 2 ticks of your target and doesn't fill, I would be moving my stop to break even for sure on that one. If you get that close, anytime you get that close, you should be moving your stop to break even so you don't get taken out and turn an almost winner into a loser. Do not let that happen, okay? Okay, now we're going to keep looking at this. And we're going to see, okay, look, what's happening now? The trade, the candles, the MACD is totally hidden now, right? There's nothing going on here, right? Even though you had one more here, look at the strength. The strength it's hidden now because it's too strong. So this trade's invalidated. Okay, there is no more trades here. We're gone. It's headed back up again. Okay, and that's the thing. Okay, you just got to be okay with that. Even though this trade did work out pretty good, you can't take it because it happened above, and that's basically a precursor telling you that that's probably the last one, and price is moving up. Okay, from that point. And if you're going long, go ahead and play long. I don't. I'm not going to. Okay. Now, let's look at this for the next cycle. Okay. So what happened there? We had a nice push down. We had lots of trades in there, winning trades in there. I count like 1, 2, 3, 4, like 5 winning trades potentially. Okay, so that's great. That's fantastic, right? Now we got more coming. Okay, there's more coming. Even though it's an up day, right? Even though look, price is headed up most of the day, there's still these opportunities to take these trades to the downside, and they work out a lot easier and a lot better than the longs do. I guarantee you. The longs are choppy, they're hesitant, they're fake outs. They break out for a second and then they like totally suck you in and stop you out. It's horrible. Long trading is really hard compared to short trading. All right, so let's look at this next one. And what's great about this next one is that, remember, we're in the zone down here. I showed you early when we very first started. We're still in the zone here at 1045. We've still got the MACD line well under the signal line, okay? And we're in a zone of tradable candles, okay? So now what we're going to do is we're going to look and see when this swing low happens, it's significantly lower than the last. I mean, this swing high happens, okay? It's significantly lower than this one, okay? And you can see that very clearly, right? Much lower, okay? So now that this is a much lower swing high, rather than scalping, we're going to look for a runner, okay? We're just going to look for a runner. We're just going to see if we can let the trade run, okay? And we're going to do that by moving our stop to break even, but we're not going to put a target. We're not going to put an 8-tick target on it. We're just going to get in, let it run the 8 ticks, and then we're going to move our stop to break even and see what happens. Okay, why? Because this was a much lower high. We're still in the zone for selling, the sell zone, okay, as indicated by this region here where you've got a fast MACD line well under the signal line, okay, on the 5-minute chart, okay? So this is your golden opportunity zone, okay? So just keep that in mind, all right? Now, we're going to go over here and we're going to look to see what's happening with our price, okay? On this first leg down, we took all these trades, right, when the color change occurred at the slower cloud or the faster cloud. We only took trades when MACD rolled under the bar, okay, that was just the 0 line. All right, we got a lot of really good trades. We missed out on this one, too bad. But we got some good trades here, especially these first few trades. This 1, 2, these 3 were pretty obvious and pretty easy. Okay, now for the next set of trades, we see here, we notice, okay, that we're still in the zone. We have price kind of peaking out again and rolling down. Here's a big push down here. That's a precursor of things to come, okay? But we're still bouncing around above the 920, the green cloud. Okay, we bounce off the bottom of the green cloud a couple times, and then we bounce well under it, okay? And then we back test it here, okay? And I put this little pathway so you can actually see very clearly that we back tested here. Okay, so this would be for sure your first trade, and because this swing high was so much lower, that's indicating a lot of weakness, okay? So instead of scalping this time around, we scalp when the swing high was higher than the prior swing high, but we let runners run when the swing high is lower than the previous swing high, okay? So now that we bounce under our 920 cloud, 1 minute 920 cloud, back test it. This all occurs, this is kind of like, this is happening under the green bar. So you're fine as far as the red bar. You're totally weak. Look at this. Look how much lower this little rollover is on this MACD here. Look how much lower that is than the 0 line here. Okay, so you're bouncing under your cloud, right? Don't put a target on it. Ride your fast cloud all the way down as far as you can. Maybe you get out here, maybe you get out down here somewhere, but you're going to ride this baby all the way down, and that's going to be a really nice trade for you. Okay? It never even got close. Look at that. It never even got close to your fast one until here, at which point it rejected, and that could be a trade if you had maybe gotten in and gotten out or whatever, but there's no reason to get out if you had a nice, you're in your zone, you had a swing high that was much lower than the prior swing high, you bounced under the cloud, take your first trade here, your MACD is well under the red bar, right? Take your first trade here and just hold it. Just hold it, okay? And hold it as long as you can. You know, maybe you see this volume spike here, this massive volume spike. That's basically telling you, see this massive, that's basically telling you it's over. Okay, and from that point on, it just goes up. And you know, you would obviously wouldn't try to take this trade because look, your MACD is so far above the red bar now that there's no possible way you're allowed to take a trade under the system. Okay. So if you're just trading two minis, by the way, I just want to say every mini is worth $100 per point. So if you're trading, you know, a couple of minis, $100 a point, you're 828 down to about 818. That's 10. Okay, that's like $1,000 right there, just on two minis. So anyway, that's the strat, and I just want to show you that. That's pretty clear, I hope. It's a good strategy because it's got very clearly defined signals. You know, it really, the signals almost couldn't be any cleaner and clearer. And if you've got your you know, your MACD set up, you know, properly, you can see which ones are under the red bar and which ones are not. And if you got your Heiken Aishi candle set up properly, you can see where the color change occurs at the levels, you know, the various levels. You can see them occurring at the various levels. You can see your MACD is respecting, you know, your red bar. And, you know, these are just easy scalps to take, right? And then, but that's, again, that's higher risk scalping because you've got a swing high that was higher than the prior swing high. But when the swing high, again, you're in your zone, right? But when your swing high is lower than your prior swing high, you know you don't have to scalp anymore. You can try and take, you know, a nice clean run down as soon as your back test under your 920 occurs, right? So just keep all that in mind. I know it's a lot to hold, but just watch the video a few times and then set these things up on your charts so that you can do it. Basically, this is a 5-second chart. It's a 5-minute chart. This is MACD. This is MACD. That's it. You know, these are regular candles. These are Heiken Aishi candles. Heiken Aishi candles are available on TradingView. They smooth the price action by averaging the current candle with the prior candle, and they change color as directional trend changes. So when you take these trades off these levels, for example, off the bottom of these green cloud here, or off the bottom of a red cloud, while MACD is weak, meaning that it's rolling under the red bar, which is the zero line. I just put that red bar in there. I just took a rectangular tool and just, you know, put that in there like that, you know. Pretty simple. So basically that's it, and you can just scalp your way to making a ton of money. You know, if you're just taking 8 ticks on the ES, I mean, you know, a couple of minis is a couple $100 per trade. You know, you want to do 5 minis, $500 a trade. You want to do 10 minis, $1,000 a trade. You know, whatever it happens to be. Put your stop where you want to put your stop. You know, I myself, I want to give these things room to play out, so I'm going to actually put my stop probably 16 ticks, maybe even more. But that's okay because it has such a high win rate that if you take a loss every once in a while, it's all right. So that's it. I'm gonna end the video right now, and let me know if you have any questions.